markets that we're present in. We like to leverage Indonesia as the gateway to Southeast Asia, seeing as it's one of the biggest consumer markets in the region. And we're investing in the next generation of innovative and high growth tech companies. We're also an early stage fund, so we typically come in at the pre-seed to Series A stages. But I'll explain what all of those means on the later slides. I'll also say that we're quite agnostic in terms of sectors. So we get to look across many different industries, but these are our five main pillars. So we have new retail, financial services, healthcare, education, as well as housing. Next, please. We started this back in 2015, and since then, we've invested in over 40 companies across 6 different countries. So some of these companies might be familiar to you, Grab, Ruangguru, Sociola, Caro, but I've also added a few newer investments here, mainly Clinic Pintar, Clar, and Fairbank, among several others. Next, please. Without further ado, let me talk you through what venture capital really is, or at least an overview. So what is VC? Venture capital is a type of private equity, a form of financing that is provided by firms to small, early stage, high growth firms. So I've named a couple of global VC funds here that you might be familiar with as well. So we got Sequoia, A16Z, Axel, and Lightspeed. Funnily enough, Sequoia, Axel, and Lightspeed do have presence in Indonesia. So if you look into their Southeast Asian portfolio companies, you'll see some Indonesian companies, which further illustrates just how exciting of a market Indonesia is. Next, please. The next question you might be asking about VCs is, how exactly do we make money? And to answer that, our main return source would be capital gain. This is a financial gain or loss on an investment, and it's typically expressed as a dollar value. So typically it would be the current value of your investment divided by your initial investment cost, and then you'll get like a multiple. So let's say 3x of your initial investment cost. To put it even more simply, we buy companies at a low price and then we sell them at high. There are a number of ways a VC can exit from a company. The exit horizon may vary from firm to firm, but a good benchmark is usually around 5 to 7 years until an exit. So here I've highlighted the 3 main ways, although there are several others. But the first one would be a merger or an acquisition. And this is when a portfolio company gets acquired or merges with a bigger player. This is what happened to one of our portfolio companies, Bright Story. A few years back, they were acquired by Tokopedia. The next would be an IPO, which I'm sure a lot of you are familiar with. It's all over the news, or an initial public offering. And this is when a portfolio company gets to a certain scale and is able to then sell their shares publicly. The venture capital then converts their private shares into common stock. Although I want to note here that there's typically a holding period before a venture capital fund or an existing private investor is able to sell these shares. So it's around 6 to 8 months typically, or they can choose to hold these public shares if the VC sees that there might be upside still to the company. Last but not least, but maybe not as commonly known as an M&A or an IPO, is a secondary sale. And this is when a VC fund sells their shares to another investor. So this can be another VC firm, a private equity fund, an institution, etc. And this happens more commonly for early stage funds like Venturra, just because once a portfolio company, excuse me, gets to a certain scale, let's say they're already Series D, Series E, we don't have, our ownership is diluted and we don't have that much of an ownership to bring as much value as we did during the early stages. And so it would make more sense for us to maybe sell to a growth stage investor who would have that bigger ownership. Next, please. So now I'm going to talk you through the funding stages, or the typical funding stages. Although I first want to preface this by saying that the funding round names, pre-seed, Series A, Series B, are simply labels most of the time. And the benchmark for each stage can vary from company to company. What truly matters is the valuation and the valuation multiple that the company can command. And I'll talk about that on a later slide. But here I've listed out sort of the typical business activities for each fund. So at the pre-seed stage, you would typically fundraise from either friends or family, an early stage VC, or even angel investors. And at this point, you are expected to have developed a product, or in the best case scenario, a minimum viable product. Here, we also expect that you have some sort of a pipeline or an idea of a specific customer segment that you would want to target. The next stage would be seed to Series A, although in between there might be seed extensions, pre-Series A. Again, I want to remind everyone that these are all just labels. Here, the funding source would be an early stage VC or an angel investor. And at this point, investors would like to see some form of initial traction. And what do I mean by traction here? Uh, this refers to the amount of engagement your product can achieve from your customers. So let's say you're building an app. It's metrics like how many users have you acquired, how many active users have you acquired, and what does the retention rate look like, etc. Here, we also like to see early signs of product market fit, which basically means that you found a specific customer segment that would continuously use your product and are willing to pay for it. Uh, we also like to see that the company at this point, especially at the pre-Series A or Series A stage, are revenue generating already, because this is also an indication of willingness to pay from your users. The next stage I like to call growth stages. So it's any stage above Series B. At this point, you will be fundraising from later stage VCs, strategic institutions like your conglomerates in Indonesia, or even private equity funds sometimes. Here, the focus is to really scale revenue and capture market share. You can do this by entering new markets, expanding your revenue streams, or even building out new products. So at this point, you've clearly found a product market fit and are now focusing on capturing market share. The last stage would be what we call mezzanine. And this is typically in preparation for a merger, an acquisition, or an IPO. And the funding source is similar to growth stage, but the company can also choose to remain private and use private investor funds to grow even further. Next slide, please. Another question we get very often is, because we're at the early stage investments, how do we value companies so early on, especially if they're not revenue generating yet? We use what is called a valuation multiple for those that do have some form of early revenue. So multiples are commonly based on key metrics such as annualized revenue, gross merchandise value, or annual recurring revenue, depending on the business model. So let's take the example of a subscription-based company, someone like Netflix. So you pay for a Netflix subscription every month. That's a subscription model company. The valuation of Netflix for a VC would be their annual recurring revenue. So that's basically what they make from all of their subscribers in a month, multiplied by 12 times the multiple. So let's say Netflix is valued at $100 million and their annualized recurring revenue is around $10 million. These are all just fictional numbers. Their multiple would be $100 million divided by $10 million, and that would give you roughly a 10x. So then how do we determine these multiples? Associates typically undergo what is called a comparable analysis, which can be done in two ways. First, you would do a public comparable analysis. So here is where you search for companies in a similar sector or with a similar business model, and you compare their revenues and multiples. So let's say you're trying to value a beverage company. Comparable companies would be public companies like Coca-Cola, let's say, Coca-Cola, Sprite, etc. So you'll find out all of their analyzed revenues and the multiple that they're currently trading at based on their market cap. And then once you have a list, a large enough list of companies, you can figure out the average multiple as well as the median multiple to find out what's a fair trading value for the company you're trying to assess. The trickier part is conducting a private comparable analysis. When you're trying to assess the multiple for something that's a business model that's never been seen before, which happens quite often in VC, right? You usually want to derive it from other emerging startups, which are usually private. Uh, Luckily enough, we usually derive this from databases such as PitchBook, or because VC is such a tight knit community here in Indonesia, we get it from intel from other investors and startups. So I think based on this, it's easy to say that early stage valuation is more of an art than science, and many external factors can influence valuation multiples. And these can include things like the macroeconomic environment, the investor's appetite, the founder quality, as well as the revenue quality. Next, please. So I think the moderator has mentioned that
Yeah.
we will have exciting prizes
Mm-hmm.
for the fastest answers. So here's your first question. Which one is not a part of venture capital funding stages?
Okay, Faya, I think our participants have already answered your questions, yeah.
Ah, very fast. Okay, sounds good. Then we can go to the next slide.
Yeah, congratulations. Okay, so all participants have already answered the option C, yeah, Faya, yeah.
Okay, sounds good. Good job, guys.
Good job.
Okay.
Okay, I think,
The next question we get a lot is what makes an attractive pitch an investment opportunity for investors? Uh, Here at Ventura, we look at four main things: exceptional founders, a huge market opportunity, an amazing product, and a scalable business model. Uh, Maybe we can go to the next slide. So here are some metrics that we look at for each factor. I'll go through them one by one. But founders are super important, especially if we're talking about a very industry specific company. So let's say you're building an agriculture focused company. If your founders if your founders are veterans in the industry, they've handled a, a, a lot of trade between distributors, manufacturers. They've gone on the ground to talk with farmers directly. That would add a lot of brownie points to investors. We also like to see a team that have complementary skill sets. Uh, so uh, to give you an example, when we invested in Par, it's a clear aligner company. Uh, the team was built out of two dentists, an ex McKinsey consultant, as well as an ex Unilever chief marketing officer. And one of our big main pieces on the company was that their skill sets were very complementary to each other. They worked very well with each other through our interactions with them. Next, we like to see a huge market. Sorry, go back to the previous slide. So VCs like to invest in products that have a large enough market size, but also a large enough target customer. Here, we also take into consideration the competitive landscape. So, how much of that market can you reasonably penetrate by taking into account all the competitors that are currently in existence? Third, we obviously would like to see an amazing product, something that solves a very valid pain point and has a clear value proposition for all of the stakeholders involved. Uh, Here, we usually ask for product screenshots, a demo account to play around with the product ourselves. Uh, Another key indicator that the product is amazing would also be the product's traction and the milestones that you've reached. So let's say you've reached a million active users within 3 months. I think that would be very impressive. The last would be a scalable business model. So how do you plan to make money out of this product? Uh, does do the unit economics make sense? And what I mean by unit economics is for every unit of the product that you sell, or for every user that transacts on the app, how much gross margins would you make? Uh, and do those gross margins make sense, taking into account your operational expenses? Next, please. Just to give you a little bit of color on our process as well, I think this is pretty similar across many different funds. But what happens is a founder would typically pitch to an associate like me. We'll have an initial discussion on about the company, about what they're building, where I'll ask a bunch of questions about the product. Uh, and the next step would be follow-on discussions. Typically, an associate will loop in a managing partner to discuss even further with the founder. And we do what is called due diligence. So we'll ask the company for their data, things like financial data, traction data, legal documents, and contracts. Sometimes we'll also do due diligence on the field. So we'll actually go to their offices, or in the case of agriculture companies, we'll go to the farms uh, to check on the company. And then we do what's called an investment committee presentation. And this is where either an associate from the VC will pitch to the investment committee, who has the final say on the investment. The next step would be the issuance of a term sheet. And so I'll talk about a term sheet in the next slide, but it's basically an agreement with the founder stipulating the investment terms, how much we're going to invest, at what valuation, and whether or not there is a discount in the term. The last step is pretty self-explanatory. We'll then close the deal and then transfer the money to the company. Next slide, please.
Okay, quiz again. Okay, guys, you can drop the answer through the chat boxes, yeah. Okay, Yazid, C, B, B, C. Okay, B. I think there are two options, yeah. Miss Faya, yeah. A from the Farizal. Really, it's an existing product. A and B. Okay. Okay, maybe we can see the answer, yeah. Faya.
Yep.
Okay, the answer is B, guys. So the answer is B. So the correct is by Adrian, yeah, Adrian Julio Nigel. Congrats. Okay. Okay, fine.
Good job, guys. So I think I mentioned what was called a term sheet in the previous slide. But a term sheet is basically a non-legally binding document from VCs that we give to founders, illustrating the intention to invest with the outline proposed terms. So it's a very long it's a pretty long document. I think sometimes can be around 10 to 12 pages, but it stipulates a few key terms. Most importantly, the investment amount. So how much you are willing to invest in the company, the valuation of the company. Typically, there will be some negotiations around the term sheet before we execute it or everyone signs on it. The liquidation preference. So in the case where the company undergoes a liquidation event, let's say it gets acquired or the company winds down and has to pay back money to the investors, how much of your investment costs will you get back? And last but not least would be the board composition and reserve matters. So typically, if you were a lead investor or if you have a significant amount of ownership, the VC can appoint uh, a person to sit on the board. and this is usually a managing partner. There are two types of financing typically. So you can do an equity investment. So simply the issuance of new shares to incoming investors, or we do what is called a convertible note investment. So think of this like a debt uh, to the incoming investors. So instead of the company giving you shares outright, uh, they'll give you a promise for shares at the next round. And in this case, a valuation cap is set. So for investors coming in at the current round with a convertible note, let's say the valuation cap is $5 million. Even though the company raises money at $10 million valuation in the next round, those existing investors uh, will have ownership at the will have a price per share with that $5 million cap. So I think that completes the overview. That's a little gist of venture capital in a nutshell. But maybe we can go to the next slide. But I also want to share that we are currently opening our summer internship program. And we've had 3 batches so far. We love all of our interns, and we're currently doing another one. So, very quickly, the requirements are that applicants must be a final year student or a fresh graduate with a GPA above 3.3 or equivalent. We like interns that are outgoing, self motivated, and fun to work with. Someone who's able to evaluate business models with an incredible eye for detail and outstanding analytical skills. Someone who is able to be flexible and helps team members ad hoc to achieve a common objective. And preferably someone who will be able to work in the office during the internship period. I also want to mention that no prerequisite financial modeling or technical skills are needed. I think just basic business acumen is enough. You will learn a lot on the job itself. So really excited to welcome everyone. And I think with that, would like to open the floor for any questions you might have on VC in general uh, and also the internship program.
Okay, thank you, Kak Faye, for the overview of the Ventura Capital. Yeah, I think maybe guys, please let us know if you are already applied for the summer internship. Here we have Kak Tony ya that already applied. Congrats. Maybe you guys can apply today for the summer internship. Yeah. And here we have questions for Kak Faye from maybe Kak Amir. We have to already a question from Kak Rahmat dulu ya. Okay, are VC able to give the capital in form of conventional debt, Kak Faye?
The short answer is yes, but it will depend on the fund. So in Ventura, we typically do not hand out conventional debt. We hand out convertible notes. So as I've explained in the previous slide, convertible notes are simply a promise of equity shares during the next round. But there are a type of VCs that offer venture debt. And this, I think, is the conventional debt that you were talking about. There's an interest rate attached to the debt, and it's usually based on the company's cash flows. But it's a very different ball game from a conventional uh, equity or convertible note investment. Hope that answers the question.
Okay. Oke, Kak Rahmat boleh kasih reactions thumbs up ya atau applause nih. If you want to follow up the follow up more questions, please drop your questions to the chat box ya, Kak Rahmat. Okay, from Kak Ngap nih, how for the summer internship nih Kak Faye, how about the for undergraduates? Maybe Kak Ngap ini maybe in fourth semester or fifth semester, but not in final year or not the fresh graduates. How about the undergraduates?
So we typically still do prefer final year students just because the consideration is that you would be already working on your thesis, you'd have a little bit more time on the internship itself. but does not close the opportunity for anyone not in their final year to apply. So that would still be in our consideration as long as you would be able to manage your time wisely. Lah.
Okay, thank you, Kak Faye. Hopefully, the questions are answered ya, Kak Ngap ya. Okay, next question is from Kak Adrian Julian Gill. How does Ventura define the potential upside of a company and how has it affected the investment decision, nih, Kak?
Hmm, good question. So typically, when we're due diligencing a company, uh, we would work our way back from the $100 million number. So so if you have annualized revenues of $100 million, that typically implies unicorn valuation, right? So what we do is, depending on the company's business model, from that $100 million number, we work our way back to figure out, okay, to reach this, how many users do we have to acquire? How many users have to be transacting on the app? And then we take a step back and sort of do a sanity check by comparing that number to the total market size. So is this number of users feasible? So if you're saying that you need, 9 million users to reach $100 million, that's the population of a few cities combined. Is that really possible? So those are the sort of questions that we ask ourselves, and that's how we get challenged from our investment committee as well.
Okay, thank you, Kak Adrian, for the questions. Yeah, hopefully, Kak Faye has answered your questions. But if you want to follow up more the questions, please drop the next question to the text box. Yeah. Okay. This is from Kak Ngap nih. Kak Ngap hopes that undergraduates still available nih Kak for the summer internship. Yeah, I think Kak Ngap will have to fulfill all the requirements ya Kak for the summer internship ya. Okay, next from Kak Edward. Hi Kak Faye, thanks for the presentation. I got a lot of great insights nih Kak, but I was wondering, could you expand a bit more on how VCs usually handle investments that are not up to expectations?
So this happens more often than you would think. But my answer to this is always VC is a business of risk. So there's a concept here called the power of law. And it's that in the 10 companies that you invest in, you're hoping that at least two will be fund returners, 10x, 20x your investment cost. Around like six will be okay exits, 2 to 3x, and then the rest might fail, or even more sometimes, even more might fail. So what do we do with those companies that are not up to par? Uh, the simple answer is that if it truly were not to work, VCs are typically protected by terms in the term sheet that I mentioned earlier. So there's a clause called liquidation preference. And let's say the company isn't able to make it work, they have to pay back money to the investors, then the VC will be protected by that liquidation preference. So the industry standard is usually 1x of your investment cost back. But in the worst case scenario, that the company isn't able to afford to give the VC that 1x back, then the investment will be written off. And although that does sound scary, it is up to the portfolio managers and our partners and the associates to make sure that the structure of the fund is set in a way that our losses are hedged by better investments, that we do not invest too much capital into one company and there's not that much of a concentration risk on only a few companies. So simply put your eggs in enough baskets.
Okay, give applause to Kak Faye nih for the answer ya. Hopefully the questions has answered well. But if Edward want to give more questions, please do not hesitate to drop more questions ya. Okay. From Rahmat again nih, Kak Faye, with the occurrence of many issues related to layoffs ya in the tech industry and issues related to offer valuation from the VCs to startups. If you can choose ya, Kak. If you agree, will there be a change in the valuation scheme of the VCs themselves in the future?
The valuation scheme of the VCs themselves in the future. Just to clarify, Rahma, do you mean how VCs value startups here?
I think the questions from Rahmat is around there, Sika.
Okay, understand. So I think with the current macro conditions, we are already seeing quite a bit of impact in terms of valuation expectation. But I will say it's more on the founder side, where valuations have slightly dropped. So if you were reading the news, you would know that 2021 was the peak for startup valuations, not just in Southeast Asia, but globally. Uh, so a Series A company could be valued at $100 million, $50 million, even pre-revenue, which is crazy to think uh, in this current condition. So from what I've been seeing, valuations have been corrected a little bit, but there's definitely no telling whether or not this trend will continue moving forward. Uh, I don't know myself if this will bottom out soon, to be honest.
Okay, Kafai, I think Kak Rahmat has already reacts yeah, to your answers. He really satisfaction with your answers, Kak Ye. Okay, next from Kak Yazid, I think this is an interesting question nih Kak. Hello Kak Faye, what is your typical day-to-day activities as an investment analyst?
Okay, my day-to-day activities. Uh, so I will usually start the day with a bunch of founder calls. I will say that 60% of my job is just in calls with founders, getting to know founders, learning more about their companies. Uh, and then the back 40% would be a lot of due diligence. So specifically at Ventura, the next step after an initial call with me would be an initial call with my partner. And if my partner agrees to move forward with a company, there'll be a whole due diligence stage. It usually takes up to 4 weeks for us to really sift through all the data. So it's a lot of crunching numbers, going on Excel, and the output from that due diligence would be an investment memo. So it's typically like a 15, 16 pager. Sometimes if you do a lot of market research, it can go up to like 26 pages sometimes. But we create that document and we send it out to our investment committee, usually 3 days before our IC meeting. And they'll have time to sort of read it through. And during the IC meeting, the founder will then pitch themselves to the IC. At which point, it's my job to answer any questions the IC has about the company because we will have our own internal discussions about it on what we think of the founders and the company. And then I think the portion that not a lot of people talk about will be the networking. Uh, so VC in Indonesia is uniquely very tight knit. All of the associates from many different funds know each other very well. Uh, so will have coffee chats, meetups, networking events almost every week, maybe twice a week sometimes, just to share deals, share insights on the industry. Uh, I'm very grateful for my friends in the industry. You learn a lot just by talking to people. So I would say the day to day is very varied. It's always an exciting day.
Okay, seems fun ya Kak. Thanks for answer. I think Kak Yazid really want to be like you Kak, for the investment
Then
analyst.
apply,
And
Yazid.
yeah, and I think Yazid, you have to apply to the summer internship ya by Ventura Capital. And Kafai will waiting for you. Okay, next question from Kak Kartik. Ready? What is the preferred language for operation in Ventura? Would speaking Indonesia be required, Kak?
I would say a majority of the time we speak in English, but Indonesian, conversational Indonesian, I think, is required. Some of the founders are Indonesian. And I mean, all of us are Indonesian with the exception of our Vietnamese associates. So it would just be a little easier to communicate, especially externally.
Okay, I think that's all answer the question ya, Kak Kartik ya. So Indonesian still required for the operation in Ventura. Okay, next from Rafi. Thanks, Kafaya, for the information session. I have two questions, Nika. First, for Ventura itself, is the firm industry agnostic or have a specific industry in focus, or does it depend on current trend? Maybe you can answer first.
So we are industry agnostic. I've seen everything from Web3, agri, retail, fintech, you name it.
Okay, it's a lot of many industry that Ventura give the capital. Yeah. Okay. The
Yep.
second is as FTC itself is a very social job. Does associate have the responsibility Nika, to source deals, or is it a responsibility for the leadership?
Yes. It's the associate's responsibility to deal source, specifically for Ventura.
Okay. Quick answers ya, Kak Faya ya, for
Yep.
two questions from Raffi. Okay, Raffi, you can share your reacts for the Kak Faya. Okay, next from Ilham. Hi Kak Faya, excited for presentation. What is the output of your typical work, Nika, as an investment associate? Is it like a deliverable output of deck or like consulting or anything else?
So it's an investment memo. It can be a deck, it can be a document. It's usually a document, but typically every investment decision hinges on that investment memo.
Okay. Okay, Kak Faye, I think Kak Clarissa have attended our session now. Are we next to the next question or we
Yes,
introduce
let's continue
Clarissa?
with the next question.
Okay. Okay, next question is from oh ya, Kak Muhammad Yusuf Nugraha. Hello Miss Faye, may I know the total AUM managed by Ventura today?
So our formal fund size to date is 165 million USD. So our first fund was 150 million USD. Our second fund was 15 million USD.
Okay, quick answer again. Okay, next from Kak Albert. Thanks, Kak Faye, for your presentation. How does Ventura adjust its investment approach during this tech winter for startups where it's harder to get funding? Is it Ventura changing the types of companies they invest in or utilizing alternative metrics to evaluate potential portfolios beyond GMV, Nika?
Yep. Uh, so in light of macro conditions, we have a few mandates from our IC. I think at the moment we prefer assessing post-revenue companies. So we're still very much early stage, but we need at least some form of early traction or early revenue to really be able to pitch it to ICs. So a lot of the times we're actually assessing companies that we've spoken to before, but we weren't able to participate in their investment round, and then monitoring their progress up till now, then kind of reopening conversations to see whether or not they're still fundraising. Does that answer your question?
Okay, if you have more questions, please drop your answer. Please drop your questions, yeah, Albert. Yeah. Okay, Albert has one question, Sika. One more question: is the issue with SVB impacting the investment environment in Indonesia or Southeast Asian? Does it also affect Ventura's investment activities?
So thankfully, none of our portfolio companies were exposed to SVB. To my knowledge, it was mainly US-based companies that had deposits in SVB. So I will say the impact is quite minimal for Ventura specifically. For the rest of Southeast Asia, I truly cannot say. Uh, if a portfolio is based in the US and has deposits in SVB, then that would be an issue.
Okay, thank you, Kafaye. Okay, thank you also for Albert. Yeah. Next, from uh, Rafi, what differentiates between a great and mediocre associate in VC firm? Is it the number of deal source or is it the quality of the investment memo, Nika?
It's a good question. I will preface this by saying that from my experience in a VC, a lot of things are out of your control. as to whether or not an investment does get through to the investment committee and we finally invest in a company. Uh, so number of deals sourced, I think, is not an accurate metric to track because you can source 100 really crappy deals in a week. Sourcing huge quantities of deals is easy, but really picking out quality deals, quality founders, uh, business models, and sectors that are exciting, that is much harder. So I think what differentiates a mediocre and a great associate is the ability to form an opinion and the ability to form conviction. Being opinionated is super important in this industry. So it doesn't matter if that opinion turns out to be wrong. No one has oracle glasses. No one can see the future. And hindsight is always 2020. But my advice to anyone, at least who's planning on jumping into VC, is to be more opinionated about things, form hypotheses about things you read in the news, about new companies, about interesting startups that you see in the news. Uh, Remember that it doesn't have to be correct, but always have a good justification to these opinions. I think that's what makes a great associate.
Okay, okay. I think you have to be prepared, yeah, Karafi, yeah. Okay, Cafe, we have a lot questions here, and I think you will answer more questions for the next 30 minutes, yeah, Kafaya. Okay, from Gary Krishnawan. Hi, Kafaya. Thanks for the insightful information. I'd like to ask, can you give us more insight on what to expect as an intern at Ventura? Is it more focused on screening investment opportunities or portfolio management or anything else?
Yep. So as an intern at Ventura, you'll be working very closely with the associates, mainly myself and my friend Ezra. You will be helping us on due diligence in live deals. You'll have the opportunity to lead founder calls once you feel comfortable enough. And for those calls that you lead, you will be bringing them and pitching them to our partner at our weekly Monday meeting. Uh, Aside from that, we have some internal projects in the portfolio management side. So you might have some opportunities to sit in on meetings with our portfolio companies, trying to assess and see whether or not they would need our help. Usually they need things on like market research, if they're entering a new market, etc. But other projects are quite ad hoc, I would say. Uh, so a bulk of it would really be founder calls and due diligence.
Okay, thank you, Kafaye. And this is still related to the summer internship, Kafaye. This is from Kartik Reddy. It turns out Kartik is a US citizen, Nika. Would Ventura be open to foreigners in this Southeast Asian VC space in the internship analyst role?
So unfortunately, I think we do prefer someone who resides in Indonesia or is able to come into the office. So many apologies, Karthik, but you will be the first person we reach out to if we do open remote internships in the future.
Good job. Good job, Kartik. Good job.
Thank you
Okay.
for the enthusiasm.
Thank you. Okay, next from Kenji. I'm curious about how Ventura especially doing market sizing towards new company, like for example, eFisher.
Gotcha. So there's two types you can do. There's bottoms up or top to bottom approach. For bottoms up, you usually look at who the target customers are. So if we want to do e-fishery, you would gather data on the number of fishermen uh, within Indonesia, and then try to see what the penetration what the assumed penetration of e-fishery would be towards those fishermen. So let's say they only mereka hanya bergerak di suatu geografi, they're only in Jawa Barat. Let's say, so how many fishermen are in Jawa Barat? And then from that number, what's the penetration rate that's feasible? Top-down approach is more vague, I would say. So it would be the total sales of fishermen in Indonesia, let's say, which I don't think could be quite accurate, right? Because it's not a good proxy for a new company like e-fishery. So I think internally we do prefer the bottoms up approach where we zero in on the target customers first and then work our way down.
Okay. Thank you, Kak Faye. Maybe Kak Kenji, you could react for the answer from Kak Faye. Yeah? If you have more questions, please drop your questions here. Okay, from Daniel. Hi, Faye. Thanks for the session. Question for the summer internship recruitment process. What is the typical question in the interview process? Will there be a technical test? Maybe, Kak Faye, can you share for us?
The questions for the internship interview will not be too technical, I will say. So just basic business acumen. If you have a good understanding of business models, I think that will be super helpful. But really, what we're trying to assess is your analytical skills, how you're thinking through an investment decision. What factors would you look at when you're trying to assess a company? What do you think of a certain industry? I think those are the two things you want to assess: whether or not you can be opinionated about things and how you're approaching uh, analyzing a company. So nothing too technical, in my opinion.
Okay. Okay, thank you, Kak Faye. I think this is a helpful question also yeah, for our participants who will apply for the summer internship. Maybe they will prepare for interview process. Maybe they will learn about the business itself for the technical test if there is a technical test. Okay. Next from Muhammad Yusuf, in Ventura itself, who is responsible for the investment decision? Is it VP of investment or other roles?
So the people who get the final say in our investment decision is what we call the investment committee, and it's made up of five people. One of them is our managing partner Raditya, and the other four. Uh, so just to disclose, Ventura is the VC arm of the Lipo Group. So the other four are Lipo executives, C-suites of one of our holding companies. They have a vast prior experience in private equity investments among other industries, especially tech. And so it's usually a vote between the five to see whether or not we invest in a company.
Okay. Okay, thank you, Kak Faye. Okay, we have a question from. I think we have a lot of questions. Yeah, Kak Faye. I think there are a lot. There are more
Keep
of
it coming, guys.
20 questions, and I think I'm overwhelmed about this. Okay. From Fahri S about the continuation from the internship after 3 months. Is there full time or a part time contract after internship?
Historically, we haven't been able to do that just because our past interns have not graduated yet. So we weren't in a position to give them a full-time role. But it's definitely something that we can consider, especially if you have interned with us before. If we were to open full-time positions, I think that's something that will greatly add value.
Okay. Okay, we have a third question here from Kartik Reddy. I think a lot of attendees here are very enthusiastic for the session, Nika. As a role as a summer analyst for Ventura, would be we be limited to deal sourcing from only Indonesia, or would the deal sourcing the regional in the Southeast Asia?
Nope, it's not limited to only Indonesia. So we deal source from across Southeast Asia.
Okay. Hopefully the question's answered. Next from Kak Ilham, as we already know that VCs and startups right now are shifting from high growth to profit focus. So what is actually VC right now are looking for? Is there any hints for startups can be invested? And what about the trend for promising startup to be invested in 2023? Thanks, Kapaye.
Yep. So I think, as you rightfully pointed out, there's been a shift towards focusing on profitability over growth for companies. Although I will disagree and say that growth is still a very important metric to track, although preferably not at the expense of profitability. So very often we look at companies, especially marketplace companies, right? They have like $1 million GMV, but then you look at their margin structure, and it's something like 1%, 2%, and then it's not able to cover their operational expenses. And that's something that we typically shy away from, just because we don't see a viable path to profitability here. I mean, how many dollars in GMP do you want to reach, and how much funds do you have to raise and burn until you become profitable? So I think a great way to assess this is by looking into the company's projections. So typically, when we ask for data and due diligence, they will give us their projections, and then there you would be able to see at which point do they think they'll be able to hit a bit of profitability. And then again, you work your way back, right? How many users will this take? How many transacting? How many? What's the average order value or the gross margins that this company will need to command to hit that profitability mark? So I think you're right to an extent. Profitability is very important now, but we are not shifting focus away from growth, because at the end of the day, our exit horizon is between 5 to 7 years. That's not a very long time for a company to achieve great scale.
So the answer is two, yeah, both of high growth and profit also. Okay, next is from Olivia. Hi, Faya. Thank you very much for the insightful presentation. I want to ask for internship program. Is there a possibility for me to be accepted if I don't come from a business major?
Absolutely. Our very last intern, Brian, was a computer science major, I think. Management information systems, if I remember correctly. And many of the associates I know are not business majors. So yes, please feel free to apply.
Okay, so free for apply ya, Kak Olivia ya. It's a welcome for you if you are not from business major or accounting maybe or financial management. Okay, thanks for answer Kak from Gary Krisnawan. Next, from Karahmat again. I like to ask about the terms in applying for the internship. Right now, I live in Jakarta, but in the summertime, I will have my undergoing study at Brawijaya University, and I think I can only do the work remotely. Can I still
Mm.
able to continue apply the internship?
I I would say that we do encourage you to apply only if you can attend the internship in person in office, since it's just much easier, especially when we have ad hoc tasks to work with our interns.
So there is still a chance ya Kak to work remotely.
Uh, Probably not if it's fully remote. Sometimes we have arrangements where it's a mix of remote and in person. So let's say you can do in person for like most of the internship, then I think that's okay. But not fully remote, unfortunately.
Okay, okay Kak Rahmat. Okay, thank you Kak Faye. Next question from Kartik. Follow up on the prior question. I prefer working in person in Indonesia for the summer and currently reside in Singapore. Would the relocation and need for a visa eliminate me from consideration?
So unfortunately, we have not been able to give work visas yet to foreigners uh, for this internship program. Unfortunately, yes, Karthik, I'm really sorry.
Okay, Kartik, you have I think you have to still waiting for the next summer internship. And hopefully, the foreigners can join to
Yes.
the summer internship. Okay, I think last question yeah. Oh no, there is still a dozen of questions, Kak. Depends on the time, yeah, guys. Yeah, I think not all the questions can be answered by our speakers. Okay, from Edward Surya Putra, do you have any tips on students looking to get into VC, like what to we have to learn and how to get referrals?
I will say network, network, and network. All the VCs are super active on LinkedIn. If you connect with them and you send them a private message asking for a coffee chat, asking to get to learn more about their firm a little better, 9 times out of 10, they will happily take the call. Most of the associates I know are very nice, and it's quite common actually. So please don't hesitate to reach out. There's no harm in doing so.
Okay, maybe Kak Edward, you can ask Kafa yelling in ya for the next tips. Okay. Okay, thank you, Kafaya. Next from Kak Daniel. Two more questions for the interview process. Is it like a case interview in the consulting? And the second, are there any further steps after the interview?
So I don't think I can disclose all the interview questions, unfortunately, guys, in this call. But on the steps after the interview with an associate, there will be another interview, a final interview with our managing partner, and then a decision. So those are the only three steps after application.
Okay, thank you, Kafaya. Next, okay, I will choose. Okay, two questions more from Albert. If we come from a background that is not related to capital markets but want to enter the VC industry, what step should we take apart from internship, which can be highly competitive? What skills or portfolio should we develop to increase our chance of breaking into the VC industry?
I think so. This is very cliche, but read a lot of news, uh, not just about the VC industry, not just about startups, but what's going on globally in general. I think having many interesting talking points can really boost, I guess, your perspective on things. So as a VC, you meet many different founders every week from coming from a lot of different backgrounds, and it's your job to quickly understand what they're talking about. And it'll make life so much easier if you already have at least a surface level or a baseline knowledge of these industries. I will also suggest maybe choosing a specific sector that you're very interested in. So let's say you're highly interested in fintech. Learn all you can about that sector. That would give you that would highly differentiate you from other applicants. I feel.
Okay, thank you, Kafaya. Okay, next, the last question from Albert. I think my question has been answered. So, besides networking, is there any skills or portfolio we should develop to increase our chance?
I think I think that's been answered in the previous question as well. Does that answer your question, Albert? Sorry.
Yeah. Okay, thank you, Kafai. Okay, I think that's all for the questions, yeah, guys. Okay, so far the questions that has been asked, Nika. Can you pick your three most favorite questions? Because we will choose three participants with the best questions to get Ventura merchandise.
My three most favorite questions. There were a lot of very good questions today, guys. I'm like super impressed.
Okay, maybe you can choose the first person that asks, give your questions, and then the interesting one about the summer internship, and the last
Mm-hmm.
question about the PC itself.
Okay. Jadi yang pertama is whoever was first to ask the question, yeah, so that's done, right? The second, I would say, was the question on what makes a mediocre or a great associate. I think I've never been asked that question before. So
Okay.
congrats.
Okay, congrats for, yeah, I have to scroll up, yeah, because it's
Me
a lot of
too. I'm like, I'm
questions.
reading through all the questions. I like all of them.
Okay, okay. The first person is Karahmat, and the second for the mediator. Maybe you can directly chat the KarirLab co-host, yeah. And the
Yes,
third,
please.
mm-hmm. Okay, we have two winners, and the last one.
So question pertaining to the internship, yeah.
Yeah.
Uh, I think I'll just go with Karthik, honestly.
Okay. Okay,
Thank you for
because
your enthusiasm, Karthik.
yeah, because Kartik, I think Kartik, I think he is the only one participant that from US that really want to join the summer internship.
Exactly.
Okay, Okay, thank you, Kak, for the answer. Yeah, and I think we have three winners today. And unfortunately, Kak Clarissa can join today's session for sharing the summer internship. But I think summer internship have already explained by Kak Faye. And I think this is our session, ya, Kak. The end of
Yep.
the session. Thank you very much for Kak Faye, and I will announce for the the fastest persons, yeah, that have already answered the quiz. There are, sorry, I have to scroll. There are first is Kayazid and one and Kak Adrian. Kak Adrian, ya Kak Adrian. I think Kak Yazid dan juga Kak Adrian bisa langsung chat KarirLab untuk memberikan emailnya. And for Kartik, Kak Rahmat, and for the person that give the question, the mediocre, maybe you can directly chat to the KarirLab because I have to scroll up and down all of your questions, guys. Is a little bit overwhelmed for me. Okay, maybe kakak-kakak from Career Lab, could you help me for find the questions about the mediocre?
Semangat Mbak Hasana.
For mediocre. Okay, okay, okay. Okay. Okay, guys. Maybe this is the end of our session, but I likely to remind you guys to fulfill the attendance the feedback form and also the attendance form because those two forms are are required for the certificates. And thank you for Kafaye for attending this event. I really enjoy your presentation, and hopefully all the participants can join the summer internship because if we look the summer internship is really beneficial for your portfolio, guys, as Kak Albert said, yeah. And thank you for the Career Lab for held this event, and thank you also for the Ventura Capital. And I have to remind you guys to visit the Career Lab Instagram and also the Ventura Capital, yeah, Instagram, and maybe you can have a network with Kafaye, as Kafaye said, network and network and network. As we know, a network also it's a network. Okay. And you can visit the eval company of Ventura as a feedback form to get your e-certificates.
Okay. Thank you guys for joining the webinar. I really enjoyed everyone's questions.
Okay, thank you, Kafaye. And for the five winners, yeah, this event, please directly chat to the CareerLab co-host to give your email for the Ventura merchandise. Thank you, Kafaye. Thank you, guys.
Recording stopped.